report, the 29th of November, there was some huge movements, I would say, big movements right after the US market hours. And yeah, I had to spend some time this morning looking into the whole thing to see where are the prices at the current moment. But nevertheless, we will visit the chart it when it comes to the charts. Okay. So first of all, let's move on to the news update. For today, I'd like to talk about the RBA, and because we had the RBA governor coming up to speak yesterday, and I think it's rather important to see what her views are, and also to see is if the market is buying into the narrative. They're believing that, from the statement yesterday, we saw that the governor is still thinking that rates could be raised. That's why I put there hawkish. But we want to know whether the market is buying into it. Okay, believing that this thing is it. So first of all, at the Hong Kong conference, right, RBA Governor Michele Bullock emphasized a cautious approach to managing inflation with interest rates to avoid increasing unemployment. Okay, so they want to bring down inflation, but at the same time, they want to avoid increasing unemployment because they know very well if you have employment, right, people are employed, it can help individuals manage the rising mortgage costs over here. Because as you know, what the housing prices is one of the most important data in Australia, right? So her remarks suggest that while the RBA is sensitive to the impact on borrowers, there's an exception of future rate hikes. Okay, so she's thinking, I have to be careful because they are still talking about this. Okay, their impact. So Bullock's statement have triggered expectation of a 25 basis point rise at the RBA's February meeting. Now, so those leading to several potential outcomes for Australian investors right now. So the way she's talking, right, we have seen some market analysts, economists, they are predicting probably a 25 basis point rise come February. And what's going to happen next is that if we have this would the first potential outcome would be a stronger Australian dollar in the near term. Okay. And then weaker property prices. If you're in Australia and planning to invest there, you definitely see this because the expectation of interest rates going higher always will affect property prices. Okay. Domestic listed property sector. Okay. And then finally, an increase in recessionary risk. So if you were to put this thing up like that, if people think, then that's not so good. Okay, because these three scenarios can actually pop up, right? So the possibility of a rate increase at the RBA's December 5th meeting sparked discussion among analysts following Bullock's speech. However, trading market seems unconvinced, with reports revealing a low probability of a rate hike during the holiday season. Okay, so we are not going to see this in December, but probably in February. Current market expectations for February rate increase to 4.6 from 4.35% are less than 50% overall. Okay, so we still need to see whether they're going to do that. Okay, so looking further ahead to December 2024, the anticipated cash rate is projected to be lower than the present levels, implying potential rate cuts. So we are looking in probably December, we will probably be seeing some potential rate cuts when it comes to there. But it's still 50-50, we'll see. So there's an ongoing struggle between market sentiments with increasing of opinion that inflation is subsiding and central banks' effort to prevent premature easing that could risk economic stability. So overall, over here, I think these dynamics will be likely the financial landscape for the whole of 2024, right over here. So whether this thing is subsiding or not, we are looking at it in detail because it did go up a bit and that caused some uneasiness. And I think this is just not just RBA's problem. Premature easing, this is all central banks' issues looking at in this. Even the Fed is facing this, but overall 2024, I think this will dominate the situation here. Plus, when are they going to lower do some rate cuts? So these are the things we are going to look at, because currently the chances of it going up to 4.6% from 4.35, the 25 basis point is less than 50% over here. Okay, so we will see, because if they don't, then we'll be looking for rate cuts already in the future, and let's see how they're going to play out. Right. So for the moment, the 10-year bond yield has seen an increase from its previous low, right over here, the 10-year bond yields, and as yields go up, that means bond prices are coming down, right? So this reflecting growing market confidence in the retreat of inflation over here. That's growing confidence, but not 100% as yet. So this suggests, as of now, the market is skeptical of Governor Bullock's hint of another imminent rate increase over here. This shows this part. Okay, so I don't think we're going to see it, but definitely whatever she has been talking about, we have seen the Aussie dollar actually rise in value since then. Okay, but how far it's going to go after when it comes to charts, we'll talk about it. Okay, so with